Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, it's a Wednesday, and global markets are looking a little wobbly. U.S. markets overnight have seen a bit of a risk-off after 2 days of decent gains. Will today be the test for that continued outperformance that we've seen at least over the last 5-6 sessions? That's the question. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, hi, good morning.
Hi, morning, folks. You know, I have a friend who lives in Europe. I was talking to him the other evening, last evening, saying, what are you guys doing with this whole German deal being passed? And are you ready to work more? He said, no, I hope it all reverses. I hope it just passes. But that's been the real big story overnight as well, apart from Wall Street, of course. So, yeah.
You know, the biggest story for me, and I wake up, forgive me for being a lot more philosophical this morning. We spoke about small wins yesterday and the big win that emanated in the markets itself. You saw the pictures of those astronauts landing into that middle of the ocean in that pod. Look at the glee on their faces. I mean, everything else that we discuss out here falls flat in the face of just reaching home. And it need not necessarily be your house, but just the earth. I mean, what a wonderful moment this is, right? 9 months of unpredictability. We're struggling with, whether I'll be alive tomorrow or not. Will everyone take me back or not? Look at those pictures, such beautiful images, and that's how I've woken up this morning.
Yeah, that's history, that's humanity, that's everything rolled into one. Fantastic moments there.
Absolutely. Over 286
days. Imagine counting every minute of 286 days of uncertainty.
And a real complex ride back home. We crib about our rides back. This was something
Traffic,
else.
Stock markets, infrastructure, nothing comes in the way of, wait for a moment and watch the smile on Sunita Williams' face. Oh, man, that's home.
Happy to be home. Well, absolutely. And, the question, of course, for our markets here this morning is whether we'll be able to sort of, stay the course directionally or not as well. So let's just sort of rewind the clock to where we left off yesterday in terms of the U.S. session, and we'll sort of come back with, the probability of the market, what we do today here. So risk off in U.S. equities once again. And when I say once again, that is largely because Friday was 2% higher. Last Friday, the U.S. was up 2%. Monday, the U.S. markets were higher. But we sold off once again, 1.7% lower on the NASDAQ especially. So Tesla was down sharply, NVIDIA, and a bunch of other names as well. So mega tech in the U.S. is performing very poorly. The air is leaking out of U.S. mega tech companies. Wix was up about 6%. You had that NVIDIA CEO, Jensen Huang, who spoke at the GTC conference, which is pretty closely watched. And I was saying this yesterday towards the close, that maybe that speech is not as important as it was maybe even 2 months back, when the only game in town was AI and mega cap and mega tech, etc. But in any case, I mean, a lot of enthusiasm about the size, scope of AI spend, etc., but didn't really move the broader equity markets like it would have about 2 months back. Now, in terms of geopolitical headlines, Russia has agreed not to target Ukrainian energy facilities for 30 days. This is after, of course, a phone call between Putin and President Trump. Of course, the only thing is, this looks like a kind of a temporary agreement, while a wider kind of ceasefire is negotiated, and both sides would want to do that. I mean, give a little and try to extract as much as possible before the broader ceasefire. So we'll see. Oil prices were down about 0.75%, 70.5, but don't attribute this to this or that, because, I mean, even as one conflict looks like a ceasefire is coming broadly into view, look at what's happening in the Middle East. I mean, the conflict is reignited once again. So about $70.5 on oil. Yields were lower, but marginally. Dollar index was flattish as well, so nothing very much on the broader dollar. Gold prices were up about 1% or so. Germany's fiscal package was cleared by the lower house of the parliament. The upper house will need to clear this as well. 2/3 majority needed there. But hopefully this will, at least that's the expectation, it'll get done. Bank of Japan decision today likely to be a non-event. We'll hear commentary, etc. Later tonight, you have the FOMC decision as well. We'll wake up to that. Again, likely to be a non-event. I mean, most likely with everything which is happening and so many different wheels in motion, the FOMC also expected to say that, well, we'll wait and see how things are going to progress. So that brings us to where we are here. So the backdrop is negative, especially in the US. But we've had a nice kind of nearly about 1,000 odd point move from the lows 2 weeks back. So the near-term resistance, we, by the way, took out the 20-day on the Nifty Bank, the mid and the small cap indices. In the near term, the resistance is around exactly where we left off yesterday. Which is 22,847. We are at 22,834 as of yesterday's close. 22,847 is nothing but the 40 exponential moving average, a 40-day exponential moving average for the Nifty. Support comes in at 22,353, which is nothing but Monday's low. So these are near-term levels to watch out for. I mean, technically as well, after this 1,000-point move, and when you are recovering after a sharp correction, you want to take it day by day and you want to see how strongly the market holds out. And I think all of that will be very, very closely watched. The expectation was the market gets to about 22,800, and then we will see. We are there. And of course, we've got this US sort of a down day. So I think we'll have to see how the market responds. Resistance for the Nifty Bank as well. I mean, on your screens, 49,519. We left off at 49,314, and immediate support comes in the band of 48,481 and 48,629. Again, very, very near-term levels is what I'm putting out there. On your screen, 60 points higher for the GIFT Nifty, 22,953 is where we are starting. There is already the Bank of Japan headlines which are starting to come through, and I think it's a no change, widely expected to be that to be the case. Surbhi.
Yes, absolutely. So the first, big headline out of Asia is that Bank of Japan rate announcement, no change. But by no means does the market feel that they're done yet. It's just fairly complex, and that's what a lot of the economic commentators are saying, that with tariffs, maybe the BOJ just wants to pause and think about its path ahead, because the previous GDP print as well, Q4 GDP with the revised print that came, that was slightly lower than estimates. Though wages in Japan have been growing at the fastest pace in the last 30 years. The last labor number that came in about 5.6%. So anyway, for now, we don't have anything additional from the Bank of Japan. The nervousness is all about the Fed. The Fed also is expected to stay, pat, do nothing. But their commentary, their body language, what is said, what is not said, everything in between the lines, the market is going to go through that in great detail later tonight. The CNBC Fed survey, by the way, is showing a higher probability of a recession now, 36% versus 23% when this survey was done in January. For 2025, the GDP growth expectation has come down a little bit to 1.7%. The number was 2.4% earlier. So, of course, those growth concerns continue to move ahead. Now, while there was good news on Russia-Ukraine, at least there's that partial ceasefire, there's bad news continuing out of the Middle East, because yesterday that fighting in Gaza resumed, and I think there were 200 casualties reported already with that ceasefire being breached, and things basically back to square one. So geopolitics is still very, very topsy-turvy. The BOJ decision we have already discussed. I'm quickly taking stock of Asian markets. Let's see if there's a reaction. The Hong Kong market and the mainland Chinese markets is slightly weaker today. Japan itself is holding on to gains for the time being, about 0.6% higher. So the picture is fairly mixed across Asia. There's some gain in Singapore as well. But like I said, China is the weak link this morning, both mainland as well as the Hong Kong market. So that's the global picture. Now, for us, the market managed to move to a one-month high. The Nifty now is basically back to the levels last seen on the 21st of February. And it's also managed to break out of a consolidation patch. I mean, it's cruised nicely above that level of 22,650, 700, which was being watched carefully by a lot of technical analysts. The question is, can we build from here on or not? Yesterday, the good news came in on the FPI numbers as well. This was the first after at least a month, if not more, that we had a positive figure. There was a bit of drama as well. There was some mismatch in data between exchanges. Finally, it was revised. And yes, it's still a positive figure. About 700 crores of buying coming through by FPIs. Domestic institutional buying was also very, very strong, over 2,500 crores of buying on the DII side. Now, apart from the overall market action, some very important cues to watch in terms of individual sectors and stocks, starting with steel, because that safeguard duty has finally come through. The DGTR, Director General of Trade Remedies, has proposed a 12% safeguard duty. This is on flat steel products. and it's for a period of 200 days till that investigation is on. So watch out for a lot of the top line players. There are indications that some of the flat steel players like Tata Steel, perhaps they could benefit a little more. The other stock that I'll watch out for is LIC, not just LIC, actually the entire insurance space, because the headlines are still coming in thick and fast. Yesterday, LIC acknowledged that they are indeed interested in, snapping up a standalone health insurance company. They say they're looking at buying a substantial stake, but no further details in terms of the timelines, etc. So watch out for insurance and LIC. And in terms of order wins, GR Infra was interesting for me because the order win they announced was pretty big yesterday, about 4,260 odd crores. So lots of stocks in news, good news on steel. And overall, the backdrop, Mankam, a little mixed because US is down, Asia is up. So we're kind of in the middle here.
We're kind of in the middle, and we've actually seen a big rally already. So maybe it's a case for pause for breath, because if you just take a look at the way our markets have performed this week itself, and this week has had just 2 trading sessions so far. The Nifty is already up 1.9%, and it's led by the Nifty Bank, which is up around 2.6% as well. And if you pull back a little from March 3 lows itself, the Nifty is up around 830 odd points. The reason why I say, could there be a pause for breath is largely because the GIFT Nifty is indicating a positive start. Will we see a, sell-off at the gap up? Would it be prudent to buy the gap up? Perhaps not. Maybe wait for a brief dip. Why do I say that? Because one, Wall Street indices are down 0.6 to 1.7% overnight. You've been talking about that. US Fed rate decision is there today as well. The FIs, yes, they bought in the cash market. 695 crores for the first time since Feb 18th itself. The last time they bought was Feb 18th, and next is exactly a month later on March 18th itself. Yesterday, the index futures saw a bit of correction in the open interest, both the Nifty as well as the Nifty Bank, telling you that there was massive short covering. And that indeed was the case as well. 4,800 crore worth purchased by FIs and index futures. 7,000 longs is what they've added. 24,000 shorts is what they've covered. And at the same time, if you look at the shorts in the system, they're slowly reducing. In just 4 trading sessions, the FI longs have increased from 18% to 24 odd percent as well. The other big reason why the market moved higher yesterday was also because the call writers, they were caught on the wrong side. So between 22,500 and 22,700, we saw a covering of nearly 1 crore contracts. And, on the other hand, this was actually replaced by a lot of put writing. So 22,800, 22,700, 22,600, a lot of put writers have been very active. Nearly 2 crore puts have been written. And that's what tells you that maybe on the way up, we may see a bit of a pause. But on the way down, we've had a better support. Put-call ratio is at 1.3. It's the higher end of the range. Typically, it shows a bit of a cool-off at these levels itself. The key indices to watch, it'll be more prudent to, go sector and stock-specific. Nifty metals, obviously because of the DGTR thing that has come by. Autos, they found their fervor in yesterday's trading session up around 2.4%. Does that continue or not? And because the support has moved higher, the street would like to bet on the broader market. So mid-cap index is something that I'll be watching out for as well. Short point, maybe we pause for a bit of a breath in today's trading session before we resume the up move that we've seen. Sector and stock-specific moves would be better and more prudent to track today.
Okay, absolutely. That's a key question. Can India continue its outperformance, irrespective of what's happening on Wall Street, irrespective of what the Fed says overnight? Well, let's move on to the equity call of the morning. Venugopal Gare of Bernstein says that FIIs have moved to a neutral to underweight position already, leading us to believe that the FII selling is in its last stages. He says the reinvestment in large quantum, however, is a function of stability of macros, currency and clarity on Trump and tariffs. He says that their sense is that sentiment on India was weak across the board, and sometimes that is a good enough sign for bottoming. He adds that surprising resilience of domestic flows despite the weak returns backdrop, however, needs to be watched. Overall, he remains selective buyer of large caps with a positive return view on the Nifty 50 as against a cautious view in the second half of last year. So that's Bernstein saying that maybe we're close to the bottom.
Okay, well, we have a special guest joining us this morning. Joanna Chua is Managing Director, Head of Emerging Market Economics and Chief Asia Economist at Citi. Joanna, great to have you with us here on the program on CNBC-TV18. Prashant here. So let's just get your sense, Joanna, on tariffs and 2nd of April and how you think the Trump administration will play things. You can make a case on both sides, right? You can say, well, it's an ideological thing. They're strong believers. Doesn't matter if short term there is pain. It's already been telegraphed in some ways, and they will go ahead. Or you can argue that at some point that they pay attention to markets in pain. So this year, S&P's, from the highs, S&P is down about, 7% or so. What is your sense? Are they going to go big on tariffs, or you think it's again going to be a little bit of giving, a little bit of sort of waiting, like what we've seen so far?
Right. Look, I think we should expect more, right? I think Trump and even Treasury Secretary Scott Bessent is already downplaying some of the short-term pain happening in S&P. With Scott Bessent saying this is a healthy correction. Remember the early inning of the tariff beyond China, which is already 20% off the bat. A lot of the tariff is really partly art of the deal negotiation to try to extract concessions, and that's why he's been aggressive, particularly in his close allies like Mexico and Canada. But I think after this early inning, I think going into April 2nd onwards, I think we're going to have the more structural framework of tariffs, because under Trump's view, we think tariffs serve three purposes. It's part of negotiation, it's revenue raising, and it's also kind of international trade rectification framework. And I think the combination of the second and third kind of objectives of revenues and kind of trade rectification framework is a really core part of this tariff policy. And we haven't really heard much of about that. So we should see going into April 2nd, Europe has been fairly, and aside from targeted tariffs, Europe hasn't really had the big brunt of that. And I think that is still coming. We still have a number of Asian countries that could also be relatively vulnerable. So again, China also is not out of the woods. It has 20% off the bat, but there's still a lot of number of issues that may be raised in China, whether it's the size of the bilateral trade deficit, whether of the U.S., and whether there's trade diversion and other currencies framework. So I think this is not yet, we're not yet done. But certainly this is something that the market is watching very closely.
Absolutely, Joanna. And these are very fast-moving events, right? And what we're also seeing is increased bilateral engagement. I mean, the political commentary between India and China, for instance, there's a very clear thaw out there, talk about more collaboration and sort of coming together. So equations are changing fast. But given what we know right now, this morning the Bank of Japan obviously has been on hold as well. Perhaps they also want to wait and watch. What do you see ahead for, let's talk about these three big pieces, Japan, China, and Asia, in terms of impact on growth and, more importantly, further efforts, China as well. Would you expect more monetary and fiscal measures to not just counter tariffs, but to boost the local economy?
Look, I think a lot of heightened trade policy uncertainty is not only going to impact trade activity and create a lot of distortions in trade activity, but it could really hold back a lot of CapEx decisions. And that's obviously not good for growth. That's really much worse for for economies that are reliant on trade. And clearly, China and Japan are much more open to trade than, say, U.S., which I think in the global space is actually a little bit relatively more insulated. But I think the challenge here is that we're not completely feeling the effects yet of this kind of trade uncertainty and volatility on economic activity, partly because Trump already telegraphed the tariff on China way ahead, even during the campaign. So there was already a lot of anticipation of China getting hit by more punitive tariffs. So what we've seen across Asia is these signs of export front-loading. So we see this certainly in, say, ASEAN data. Even, the expectation of targeted tariffs on, say, auto and auto parts is already hitting Korea. And so we're seeing a little bit of front loading there. That's probably also impacting some of the manufacturing cycle. So again, in the short term, we're not really feeling the full brunt. But again, because this trade policy uncertainty combined with other forms of policy uncertainty, especially in the U.S. related to kind of federal spending cuts, that really can create a bit of a growth headwind. And we're seeing this already in expectation of a pretty sharp slowdown in the U.S. So when there's a little bit of a front loading, a building up of inventory, the worry there is that if underlying demand is slowing down, we get the reversal of that, kind of the payback effect, which means kind of growth headwinds could become, could worsen. And this is part of the reason why, even though the data is fine, clearly we saw out of Japan, spring wage negotiations, not hugely out of line with what BOJ was expecting, but it is showing a lot of resilience and support relative to last year. But I think BOJ wants to hold back yet because we don't really know what the picture is going to look like on global demand.
So in light of that, what do you think the Fed's trajectory would be? Largely because, the tariffs, etc., are expected to be inflationary. At the same time, the spending cuts by the government are expected to weigh in on the economy. And then the big S word that everyone's using, right? Stagflation. How do you expect the Fed to navigate through this? And what are you looking forward to tonight in terms of commentary? And what are your expectations, base case, on the Fed rate actions this year?
Sure. Look, the buzzword is that uncertainty. There's just so much uncertainty. When you look at the trajectory of economic activity, clearly there are already signs that the economy in the U.S. is slowing down. You see that obviously with some of the mixed data coming out of retail sales. Obviously a lot of soft data like survey, consumer confidence, business confidence is all kind of trending down. So that obviously creates a lot of headwinds about what the growth trajectory is. And in fact, we're expecting a 0.1% contraction on first quarter GDP growth, which is really a sizable slowdown from the kind of 3% run rate we've seen in growth last year. It's not as bad at what the Atlanta GDP now is suggesting, but it is still certainly a slowdown. But on the flip side, because of this kind of tariff pressure and what that means for inflation, you look at the inflation expectation surveys coming out of Michigan Inflation Survey. I mean, both 1 year and even long end inflation expectations have gone up a lot. And remember, part of the narrative of how inflationary pressures can be blunted from the tariff would be a stronger dollar. But what we're seeing in FX is we're actually not seeing a stronger dollar. In fact, we've seen a bit of a weaker dollar. So that even is allowing a little bit of a cost push pressure on inflation. And so when you have these two uncertainties of kind of inflation while growth headwinds, I think at this point, the path of least resistance for the Fed is let's just wait. So I think overwhelmingly people are expecting the Fed will be on hold. Despite the inflationary fears, I have to say, I mean, we have seen some gains on disinflation. So I do think that at the margin, we're expecting coming into this FOMC is that the dot plots, there could be a slight dovish tilt because it's the growth shock that's become a lot more volatile. So we are expecting that they might signal a 75 basis points cut instead of a 50 basis points cut for 2025.
Jana, just a couple of questions. Do you expect the dollar to keep heading lower, or you're expecting a bounce?
Look, I think at the moment the dollar has kind of mixed messages, right? I am a little bit worried that we could have, depending on how severe what's happening in terms of the tariff, we can get a little bit of a pullback in terms of dollar strength. But by and large, now the dollar has multiple stories that are kind of weighing on it, right? It's not just the slowdown in the U.S. It's the fact that there's been a lot of long dollar positions that have been reversal positioning. Where we are coming from is obviously also weighing on the dollar. But there's a new element now to the dollar, which is that over the last month or so, we've had a lot of kind of shift in dynamic as foreign policy, particularly in the global security architecture in terms of how U.S. is responding to what's happening in Europe, for example. So I think it's starting to weigh a little bit more about the weight of the dollar as the dominant reserve currency. There's more and more narratives now that Europe is kind of waking up to this realignment of security architecture, that maybe Europe now becomes a little bit of a competitor to the dollar. And I think that is also weighing a little bit at the dollar. So even though, certainly there could be a little bit of interim bounce, we're no longer seeing, as much of the dollar rebound as people had thought there would be associated with tariffs.
Okay. You were expecting a sharp, because tariffs are up, that should be dollar positive, but dollar's headed lower. Exactly the 5% higher on tariffs, 5% lower on the dollar, right? So but it's good for emerging market flows. So the question is, if you get, as you said, you're expecting structural tariffs from this going into the 2nd of April, right? And a more meaningful, meaty kind of thing then, and that perhaps would put upward pressure to the dollar, not so much because other currencies are waking up like the euro, etc. But even then, it kind of puts a floor, maybe. What does it mean for emerging market flows? Lower dollar is traditionally seen as very good for EM flows. So just these two things, US slowing down meaningfully, dollar maybe around these 103, 104, 105 levels. What does it mean for these two things if it pans out? What does it mean for EM flows?
Look, I think we have to also understand what's happening in terms. So first of all, there's a lot of uncertainty. We don't exactly know, what's the kind of the trade policy action coming into April 2nd. If it's not as bad, if a lot of the tariffs is maybe sort of targeted to Europe, but pretty much, Trump is going to kind of soften the blow now, maybe kind of de-escalate. Mexico so far has actually been quite, relative to Canada, has been a little bit more on the surface diplomatic in terms of how it's dealing with Trump. And if in the end, we get towards some sort of de-escalation from sort of USMCA partners, that could help at the anchor a little bit on some EM, like particularly Mexico. I think the rest of East Asia, we just have to figure out whether there's a material ramping up or not. And my expectation is maybe the focus on post-April 2nd will have a little bit more of Europe. Maybe there'll be some targeted tariffs. But, China already has 20% off the bat. And again, it's unclear whether Trump is going to escalate that a lot. If it's a lot more than expected, then, there could be a little bit of volatility. But I actually think it may not be that bad. Now, for EM, the challenge really here is, so if the uncertainty is not too bad, then I think this kind of slowdown and this kind of room and headwind for Fed easing could provide a little bit of support. But we have to watch, right? Because there's a kind of a slim margin between kind of a manageable kind of tariff, tariff pressures versus a sudden risk off. Right? Whether, if Trump does something much more unpredictable than we expect. And then we also have to worry about the growth cycle. If US, for example, slows down a lot more, or we get this, like I said, this have export front loading, that could reverse. The other thing we need to watch is renminbi price action. Like right now, PBOC is still keeping renminbi relatively stable, and we think that it's partly because of part of negotiation. But again, if let's say Trump does something more aggressive, these are some things that we need to watch very closely.
Well, it's, as you said, the buzzword is uncertainty, and so many things into the mix. Thank you very much, Johanna. Look forward to our next chat, and as we sort of deal with very fast-changing events and macro dynamics. Appreciate your time here on CNBC TV18. We'll take a quick commercial break here. We're going to just sort of tell you what the corporate interactions are, which are lined up here. So 8:35, we'll hear from Deven Choksi on markets. 9 o'clock, you'll have Parthiv Jonsa, Anand Raj, Institutional Equities. And this is, of course, on the steel safeguard duties, which have finally come through. 9:20, Harish Krishnan of Aditya Birla Sun Life AMC, market march of the day. 9:30 from management of Muthoot Finance with us. The gold AUM book is now 1 lakh crore plus. B. Tyagarajan of Blue Star and Vikas Gupta of PG Electro Plus will be speaking with us at 9:40. Trends for the summer season. 9:50, we'll have the management of Raymond join us to talk about the quarter gone by and the outlook forward. Of course, it's the economy. Latha 10:15 talks about the spate of deals in the NBFC and insurance space with the analyst at Kotak Institutional Equities.
Short break, but on the other side, a lot of stock-specific action to track today. We'll get to it in just a bit. Our special top 10 segment, where we're looking at SAIL, JSW, Tata Steel, basically all the metal stocks. Pidilite Industries, they held the analyst meet yesterday. Westlife, Food, Bajaj Auto, GR Infra Projects, and Zydus Life Sciences, along with Juniper Hotels, Nazara Tech, all of them on the back of positive news flow. And that's the kind of day where no stock on our radar is likely to open in the red, at least on the back of news flow.
Welcome back. Let's get the implied open up on the screen, because Asian markets are actually not too bad. The Hong Kong market was down. It's also turned a little positive now. There we go, about 40 points higher. That's the expected start, at least. But let's talk about the individual stocks that are going to be in focus as well, and several names on our list this morning. We'll start off, of course, with this big news that came in on steel, and joining in live from the mountains to demystify what the safeguard duty could mean for the sector is none other than our very own Nigel D'Souza. Can we see Nigel, please? He's been a big sport. There we go. That's a nice look, Nigel. Quite liking that. I mean, we could get used to it. But yeah, thank you for joining in.
Well, I expected this news to come before I left, but be that as it may, it came in around midnight last night. The DGTR has recommended that close to around 12% safeguard duty on all imports that are coming in on HRC. This is important, but keep in mind this needs to be notified by the Finance Ministry as well, which most sell-side analysts don't believe it's going to be a bit of a challenge on that front. So for the time being, it's the DGTR that's proposed it. And in fact, we'll be waiting for the Finance Ministry to go ahead and approve it. Few points to note out here. One is the industry, they were rallying for around 20 to around 25% safeguard duty. But the realistic assumption was that you'll get close to around 10 to around 15%. In anticipation of this news, you've seen that steel prices have moved up by around 2,500 rupees per ton, or around 5% in the last 1 month or so. Now, with this 12% safeguard duty, they have some headroom to go ahead and increase prices further. Keep in mind that domestic flat steel prices are already at a premium in comparison to imported steel, so there could be some headroom out there. What's positive, though, is that this price hike that they've taken, that sticks, and that directly flows down to the EBITDA per ton. As is, we know that coking coal costs have come down, so it'll be a dual benefit for them. Q3 FY25, in all likelihood, the EBITDA per ton for all these steel majors, they have bottomed out, and things will look up from here on, which is positive. Philip Capital, they have come out with the note, and they say in terms of pecking order, SAIL is the one that they believe is the most benefited, followed by JSW Steel and Tata Steel. There'll be a rub-off effect, though, on the entire value chain. So good news coming in for the steel companies, but keep in mind, they've been outperforming and anticipating this piece of news to come in there. Green on all these names. Back to you guys.
All right, Nigel, thank you so much for that. Green on steel companies and a lot of green around you in the mountains as well. Wish you happy holidays. See you soon on Monday as well. For now, we'll keep an eye out on all the metal names. Like Nigel pointed out, this was anticipated, but again, it is a positive news nevertheless. The other stock on our radar is Pidilite. They held the analyst meet yesterday. A lot of things that they've spoken about. One was them investing in capacity building, launching a new range of interior decorative paints under the brand Haisha, because all the paint companies are going into adhesives. Why not an adhesive company go into paints as well? Significant improvement in underlying volume growth and profitability in the last 9 months. And they've gotten some technology partnerships for new applications in leather goods and electronics. The focus of Pidilite pretty clear. If two things can be stuck together, they will look for solutions, literally and figuratively, to do that as well. They've defined their business, core, growth and pioneer, where pioneer categories are expected to do about 100 crore revenue in 3 years of launch itself. What is most interesting is the growth that they expect in tile adhesives. Remember, 80% of tiles in the country right now are stuck using cement. Could there be an adhesive solution for that? They believe it's a market worth nearly 25 to 3,000 crores itself. And other growth opportunities that they spoke about: wood joineries, professional solutions for large projects, adhesives for electronics, and growth in international markets as well. Basically, chasing all-round growth with double-digit volume growth and the 20 to 24% EBITDA margin target. Expect Pidilite to see green on the back of these takeaways from the analyst meet.
All right, well, so we'll keep an eye out on this one. But Mangalam, Westlife is the next one?
Westlife is the next one. There is a leadership change succession, so to say, where Akshay Jatia, who's presently an executive director, has been elevated as the CEO. Akshay has succeeded Amit Jatia as the key managerial person in the company as well. And we've had a word with Akshay a couple of times on our channel as well. I mean, a young guy, smart guy, and obviously has experience of working in the business itself. And all the quick service restaurants are in focus in any way on account of demand tailwinds. So new leadership coming in from the family, a blend of the old and the new, should be good.
Amit was fairly young himself, right? I mean, was this anticipated by the street? Just quickly, 10 seconds.
He looked a lot younger than he was.
Oh, like that. Okay, that explains it. Let's speaking of management changes or management continuity, let's talk about Bajaj Auto, because that's where there is continuity. Mr. Rajiv Bajaj for another 5 years. So Darshan, good morning.
Good morning, Survi. So before I talk about Bajaj Auto, for the entire auto pack, this DGTR recommending 12% safeguard duty on import of steel may be a minor negative. But now coming to the Bajaj Auto has made two announcements. First, Bajaj Auto has reappointed Rajiv Nayan Rahul Kumar Bajaj, or by the name that we know, that Rajiv Bajaj, as MD and CEO for another 5 years, and that would be effective April 1, 2025 to March 31st, 2030. It would be subject to shareholder approval as well. Another announcement that company has made, that Bajaj Auto board has decided that company will be making additional infusion of 1,500 crore in its NBFC arm, that is Bajaj Auto Credit. That would be made in FY26 in a phased manner. This infusion is important considering over the last few months, not only the analysts, but companies have been flagging issues related to financing of vehicles. So this infusion is important. So that's the reason I'm going with green for Bajaj Auto on the back of these two announcements.
All right, so thank you very much for that. Well, let's talk about more stocks with news flow. Vamakshi is here with details. Vamakshi.
Good morning, Prashant. Let me first start off with GR Infra Projects. The stock is expected to open higher after it has received a letter of acceptance from the NHAI. This is for construction of Agra-Gwalior Greenfield Road, and the estimated project cost stands at 4,263 crores. The next stock on my radar is Zydus Life Sciences, going with the green for this one as well, because they've received the final approval from the US FDA to manufacture apalutamide tablets. These tablets are used to treat patients with metastatic castration-sensitive prostate cancer, and they have had an annual sales of almost $1,100 million in the US markets as per IQVIA data. Apart from that, keep an eye out on Juniper Hotels as well, and that is because they've executed a share purchase agreement with Genipro Hotels. They will be developing a 5-star hotel on the Kaziranga land in Assam. So going with the green for discount on the back of this development. And lastly, keep an eye out on Nazara Technologies. They've acquired a close to 9% stake in Absolute Sports for nearly 69 crores. And with this, the shareholding in Absolute has now increased to 100%, making it a wholly owned subsidiary of Nazara Technologies. So going with the green for this counter as well.
Okay, all right, got it. Vamakshi, thank you very much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them: SAIL, JSW, Tata Steel, Pidilite, Westlife Food, Bajaj Auto, GR Infra, Zydus Life, Juniper Hotels, and Nazara Tech. There's actually no stock, like we've been telling you, on the red side of the screen today. So plenty of good news coming in. That's equities. Now let's figure out what's happening with commodities. We have Manisha joining in with the latest action. Manisha, I mean, on geopolitics, lots of varying news points, right? Slightly good on the Russia-Ukraine deal, but then Middle East, there's still all kinds of issues.
Oh, well, absolutely. And, let's not forget the trade tariff impacts on economies as well. And when you look at all of these, well, the gold prices only seem to be looking at the safe haven buying amongst all of this. Actually, when you look at various asset classes, gold is the only safe haven right now because you've seen dollar continue to decline. Various other currencies like Japanese yen or Swiss franc, which used to be safe havens as well, are not doing so well. So gold absolutely enjoying, basking in that glory. And we've seen $3,038 an ounce of an all-time high in the New York session overnight. Overall, in the metals as a sector as well, it has been going good because the markets are anticipating more stimulus measures coming in from China that could boost demand expectations. So you still have copper prices making a new 10-month highs in the overnight market. What also has been running up really has been the raw sugar prices in the international markets. It's trading at a 1-month highs right now. We are looking at a lower sugar output in India, lower sugar output also in Thailand and Brazil. So while the international prices are running, so are the Indian stocks as well. So sugar is going to be an important one to watch out for as well.
All right, Manisha, thank you very much for that. So a lot going on in commodities as well. But of course, tariffs are the big unknown, as Citi's regional economist also pointed out. We'll take a quick commercial break here. We'll be joined by Devin Choksi of DR Choksi FinServ. Stock-specific chat coming up.
You're watching us here on Bazaar Morning Call. We come to you live from the CNBC-TV18 Motilal Oswal studio. Let's get in Mitesh Thakkar and Shilpa Raut to give us their views on the index and thereafter some stocks as well. Mitesh, we've already, rallied about 800 points from the lows. Do you think it's pause for breath, or maybe it's the start of something where fresh longs can be initiated? On the Nifty and the Nifty Bank, your views first?
Morning, Umar. To me, it looks like that this bounce back will get stronger. Yesterday, we had a gap upon both the indices and many stocks, and no attempt to fill that. A lot of important levels were captured. So I think that getting past 22,800 on the Nifty was good. That paves the way for 23,070 to about 23,150 as an immediate target, and possibly 23,500, 550 as the slightly positional kind of target. So in that sense, suggests good upsides. Now, I think 22,600, as long as that doesn't get violated, I think I would be buyer on all kind of declines. We already have long positions, so the buy bias is already there, but a decline or a pullback, if it happens, will be a welcome opportunity to add to your long positions. Similarly, on the Bank Nifty, I have two targets of 49,800 and 50,200. I think both these indices, and there will be some hours of volatility in between, but I think are heading higher.
Yeah, no, absolutely. Eventually headed high. Direction is up. All right, Shilpa is with us as well. Shilpa, good morning. What do you make of it? Indices first?
Good morning, and thank you for having me on the show. Indices, we spoke on Monday also that once a move past 22,600, we'll see levels of 23,000 to 23,200 coming in. So this close above 22,800 is definitely a very welcoming and positive, structure, and we are definitely heading towards 23,000. For Bank Nifty, the levels of 49,500 will play a very crucial role. If we sustain above that, then levels of 50,000 to 50,200 will come in.
Take that point, Shilpa and Mitesh, just hang in there for a bit. We'll take a short break, come back. We'll have the pre-opening rate and also, discuss your individual stock picks. Thereafter, we'll get in Parthiv Jhonsa, who works for Anand Rathi Institutional Equities, to discuss the DGTR recommendation of imposition of a provisional safeguard duty on flat steel products. Stay with us.
Welcome back. You are with us on Open Exchange, and of course, we're live coming to you from the CNBC-TV18 Motilal Oswal studios. Our technical experts are still with us, so we've got a fair enough idea about how to approach the indices. Let's talk about individual stocks as well. Good morning to both of you, Mitesh as well as Shilpa. Ladies first, so stock ideas for the day, Shilpa.
Sure, Sudhir. There are three buys from my end. The first one would be a buy in NCC. We saw very aggressive long built up yesterday and stock trading at around 191 zones right now. Keep a stop loss of 175 from here and look for targets of 215 to 230. It is little positional, but I believe the stock is very well poised for those targets. The other one would be a buy in HDFC AMC. HDFC AMC is hovering in this range of 3750 to 4,200. So the risk reward is very favorable here. Keep a stop loss of 3750 and look for targets of 4,000 to 4,200. The third one would be a buy in SBI. SBI trading at around 735 zones. It is also looking very bullish. Good support at around 720 levels. So that should be the stop loss and look for targets of 770 from here.
All right. And Mitesh, what do you have on your radar this morning?
So from the banking pack, a buy on Federal Bank with a stop below 178 for a target of 185, 186. HDFC AMC is a buy with a stop at 3780 for targets of 3945. CDSL is a buy with a stop at 1098 for targets of 1175. And ABB is the final stop. That's a buy with a stop below 5350 for targets in the range of 5520.
All right. We'll chat again, Shilpa and Mitesh. The pre-open is also up on your screens now. Let's see how that settles. But it's up 80 on the Nifty and some 300 on the sensex. It's a pretty solid start if we get that. And why not? Even though US has been lower. We'll see. Rupee, of course, also strengthened after a while, about 1/3% yesterday. This morning we're opening at about 86.64 compared to 86.57, slightly weaker from the last close. The big story all through yesterday, of course, was Bajaj, Finserv and Allianz parting ways after a near 2.5 decade old partnership. My colleague Shireen spoke with Sanjeev Bajaj, Chairman and Managing Director at Bajaj Finserv, touched upon a variety of issues. What is Bajaj Finserv's plan from here? Is Alliance free to do what they like in terms of tying up with other partners and more? Listen in.
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better. The regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator. I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as Finserv as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. Once the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
Okay, that's an interesting and important conversation with Sanjeev Bajaj. By the way, there was one more bit. The Bajaj Finance stock will come up on your screen. And Shireen asked Sanjeev Bajaj, what's the plan with regards to Rajiv Jain, the well-regarded MD of Bajaj Finance, who's been at the helm of the company since 2007, because his term ends on the 31st of March. And Mr. Bajaj did say that there's a board meeting scheduled in the next 2 days, and they will decide on what needs to be done. But I mean, the indication we got from Mr. Bajaj is that he will remain within the Bajaj fold one way or the other, either with the group at Finserv, Bajaj in some form or shape. And that, of course, is for the board to decide. So that, I'll just quickly mention that. That's the stock up on your screen. The pre-open, of course, is well and truly underway. Surabhi.
Okay, well, now let's focus on the other hot space in the market, and that definitely is, metals, in particularly steel. Watch out for the stocks, because a lot of them are very, very excited. You would imagine that a lot of it perhaps has already played out, but no, there's still more gain. JSW Steel in the pre-open 4% higher. SAIL is about 3.5% higher. Let's pull up Tata Steel as well. Yeah, there we go. About 2% up there as well. A long-standing demand of the industry, and it seems to be finally coming through. So what does this actually mean? How much of it is going to flow directly to the EBITDA line for these steel companies with the safeguard duty in place? Parthiv Jhonsa, head of metals and mining research at Anand Rathi Institutional Equities, is joining in. Parthiv, thanks very much for taking this call. Now, I think we're just waiting for the final notification from the Finance Ministry. But I think from the market perspective, it's pretty much a done deal. 12% safeguard duty on flat products for 200 days. How much does it help?
Hi, good morning. Thank you for having me on the show. To start off with, the flat steel price had already been rallied about 1,700 to 2,500 over the last couple of weeks, right? Right now, the scenario was that your domestic mills were trading at a premium to the landed cost to the China and FTA countries. And with this 12% coming in, you can further expect close to about 2,000 to 2,500 kind of a price hike in a very near term. Historically, we have seen whether it be India, whether it be Western countries, whenever there is a ADD or a safeguard duty in place, usually over next months, the price usually increases in the range of about 10 to 15 odd percent. So right now, say for example, your flats are at about odd 50,000 odd rupees, you can straight away expect about 2,000, 2,500 rupees kind of a hike in a very near term.
All right. And if you could give us some sense, what is the price difference between the current landed prices versus the domestic prices, and will this 12% make up for that? Additionally, if these companies go ahead and increase their prices, will there be enough demand to drive volumes, and what could the concomitant impact on EBITDA per ton for these companies be?
Sure. I'll first take your first part of the question, right? What's the difference? Right now, we are trading at about 3 to 4% kind of a premium to China. And when you compare to FTA countries, we are trading at about between 5.5 to 7 odd percent kind of a premium. With this 12% coming in, this gives a leeway to increase the price by about 4 to 5% as far as parity is concerned, right? But usually it does not happen. It's usually better than that, number one. Number two, the demand is holding up quite well. We interacted with a lot of channel check networks also. December, January, the data is out. The consumption was over 13 million tons. So the data, the consumption data is good right now. There has been a data from a lot of other sectors that, construction, infrastructure, this is like the peak quarter for them as well, right? And usually Q4 is the best quarter. As far as you're flowing down to the EBITDA is concerned, there has been reduction in the coal cost. There has been, your iron ore is holding steady. And with this increase in realization, say by next maybe 1 or 2 quarters, you can straight away expect a good 10 odd percent or maybe better than that kind of a EBITDA improvement across the ferrous sector on an EBITDA per tonnage basis.
EBITDA per ton, roughly speaking, 10% across the sector. But Parthiv, if we break this down, two-part question. In terms of ferrous stocks from this, this measure that's come through, which one benefits the most? There was some analysis that was pointing out how maybe Tata Steel, etc., the ones with greater, flat product array, they'll benefit more than, say, a JSW Steel. So who benefits the most from this particular development? And otherwise, in the ferrous space, what are your topics?
Okay, you rightly pointed out, Tata has about 76 odd percent kind of a portfolio which is into flats, followed by JSW, which is 71%, followed by Steel Authority, which is about 60 odd percent, and then you have GSPL out of the top 4 listed tier 1 mills, right? Again, Tata Steel in a very near term has some benefit with this entire EU quota system being playing out, right? With their entire EU presence. So yes, Tata Steel in near term looks to be good. JSW, on the other hand, they are enhancing their value-added product portfolio going forward. So that also looks good. As far as my top picks in the entire metal and mining space is concerned, and especially, from ferrous perspective, I'll try to break down in 2 parts. It's JSW as far as your tier 1 mills are concerned. But on the mining side or the ancillary support side to the ferrous space, I even like companies like Moil, because they would feed in the material for these ferrous players.
Right. And basis valuations and, the kind of price moves that we've seen over the last 7-8 days, these stocks have outperformed the broader markets in general. Where do you see maximum delta? If one was to say bet on 3 metal stocks, what would your top picks be?
All the 3 flat producers, major flat producers, that is JSW, SAIL and Tata.
All right. Thanks a lot, Parthiv, for joining in and putting things into perspective. There's still room for 5 to 6% sort of price hikes coming in, and the net benefit on the EBITDA for all these companies per ton could be well over 1,000 odd rupees. Clubbed with the price hikes and also the lower raw material prices.
Let's just see how stock's doing at the pre-open. Let's just have JSW, Tata Steel, SAIL, etc. on your screen now. So higher. SAIL, of course, is up about 4%. I think that was seen as perhaps having the biggest delta to this announcement. Tata is up. I mean, otherwise, it's up 1.5%, 2% in that range at this point. Let's just look at the Nifty as well. There's 4 minutes to go for the market open. The pre-open is in. And prices have settled. So it's not 90 points, it's 40 points, but that's decent enough after a near 1 3/4% fall on the NASDAQ last night. So 22,875. I mean, as long as the upward drift continues, I mean, it doesn't have to be 100 every day, but as long as I mean, the market handles itself better. It trades better in the face of adversity from global markets. I mean, I think it'll sort of pique the interest of more people and keep people interested. So I think that's important during times like this. The Nifty on your screen, 22,875. So we'll see how actual open kicks off. Mitesh is with us. Mitesh, any trades coming to your mind?
I'll go with the buy on HDFC AMC. I think Prashant, that's following a bullish pattern. So 39, 40, 50 could be a good target.
Mitesh, I was looking at this number of stocks above the 200-day and number of stocks below the 200. There were only about 12% of stocks in the NSE 500 which were above the 200-day. So if the market starts to stabilize, will you focus for opportunities in this 12% basket? I have the list, obviously, but so essentially you're looking at relative outperformers. Are you looking at recoveries in stocks where there have been big price damage?
I think, stocks where there has been big price damage, I think are also oversold. So that's a good thing to play at. In fact, a lot of stocks, you will see you have come out of big declines in this fall. Starting from capital goods like ABB, Siemens, BHEL, L&T, I think all these stocks have dropped by 20-25% or some, in some cases even more. And now are showing signs of reversals, with the indicators coming out of oversold levels turning northward. The intraday averages, 2-hour chart, 3-hour chart, if you look at them, all turning into giving a positive crossovers and buy modes. I think that's a good thing to play, at least since it looks like beginning of some kind of a bounce back, and then we'll take it from there.
Okay.
Anything specific in the metal space that you like, Mitesh?
For metals, my sense is that I actually like the ferrous names as well as Hindalco or something. It started leading the rally, but I think off late what I've seen is Vedanta has caught up very well, and Vedanta is showing signs of heading towards levels of 475, 480 to begin with, and then maybe even higher. So I like the entire space, but yeah. Just from a slight tactical point of view, you might want to be slightly cautious on metal names purely because of the fact that they've had run-up. So I think it might be the ones which are yet to catch up will show good action.
I just wanted to, thanks for that, Mitesh. I just wanted to place MobiKwik on the radar as we're hitting market open. It's gone through such price action, slammed the day the shareholder lock-in opened, then it recovered almost 20% yesterday, and pre-open suggests maybe some more green today as well.
Absolutely. Yesterday was a good day for lots of these names, right? Ola, for example, was up sharply. MobiKwik is another one. And names like Sula, completely bombed out names. 10, 12, 13, 15% kind of rallies. Look at the name like IIFL, again, a big bombed out name, was up 6% yesterday. So, yeah, I mean, that's the point which we'll have to kind of track. So about 0.25% higher. That's the first rate starting to come through. 22,875. Got about 0.1%, 0.15 on the Nifty Bank. 49,381 is where we are at. So it's small green. The small cap index is up about 1/3%. Okay, the sensex has dipped into the red, so it's flattish, nothing very much at all. You got more up than down, definitely more up than down, at least to begin the day. About 11 names are lower, everything else is up. 15 points on the Nifty to show for it, 22,845. IndusInd, Bajaj, Finserv, Mahindra. We'll just talk about stocks now. Surabhi.
Absolutely, and that's the big question, right? Can we keep rallying even if the US is faltering? Let's see, very early on, quiet start on stocks. Tata Steel, JSW Steel, they are your key winners straight away. Let's pull up SAIL. SAIL is up about 4%, so doing slightly better than its Nifty peers. Beyond these major metal names, some buying on the banking side. IndusInd Bank 1% higher, SBI is slightly higher this morning. HDFC Bank is seeing a shade of green, 0.4% up on HDFC Bank as well. Some of the biggies like Lever and Reliance right now on the green side of the flat line, but let's see. It's a little tentative. Bharti, Reliance, these are the big stocks which are right now at least holding up in green. There's some buying on BPCL as well on the upside. Let's see what's not working. IT is not working. So yesterday there was a day of a bit of a relief and a reprieve, but now the selling is back. HCL Tech, TCS, Infosys, all of these stocks are down. Tech Mahindra, all falling in a pack together. Apart from this, ICICI Bank could be a watch point. It's not following its peers on the upside, at least not right now. Some profit taking on ICICI Bank, quite evident. There's Sun Pharma, Eicher Motors. These are some of the other stocks on the weak side. But otherwise, it's quiet and flat, and I think it gives the bulls the opportunity to maybe build a little later on as the day progresses.
Take that point entirely. On the front line indices, maybe a pause for breath, but the mid caps is where the action is. 1,600 stocks straight off the bat open in the green for just about sub 300 stocks which are in the red. We speak about the metal names on the front line end of things, but look at something like a SAIL, look at Jindal Stainless, look at Vedanta as well. All of them have opened higher, though Vedanta doesn't necessarily get positively impacted by the announcements that have come by. Mishra Dhatu is the other one, which is up around 5%. So basically, it's a broad swathe of green that we've seen across metal space, even though the specific positive comes in for the ferrous names itself. Some other names that really stand out. Manisha was telling us how there is positive news coming in for sugar stocks. Balrampur Chini again up 4% is where the stock has opened. And then you have some of these individual names where there have been order wins, etc. GR Infra Projects, for instance, they got a letter of acceptance for over 4,000 crore worth order, which is executable over the next 900 days. So 3 years, the stock straight up around 7.5%. Idea Forge is another one, which is up 4% as well. Senco, for the second day running, opens with a 5% upper limit. Promoters, the buyer out there. And sugar stocks typically move in a pack. So we have other names as well, Bajaj Hindustan, etc., doing well. What's not doing well? Just like the frontline space, mid-cap IT is also not doing particularly well. We have LTI Mindtree down 2%, Persistent Systems down about 1%, Emphasis down about 1%. Birla Soft is another one, which is down about 2/3% as well. All in all, a good start from the mid-cap standpoint. 1,800 stocks now advancing in the green.
Well, absolutely. And, we'll look at a few other names before we bring in our market master today. So ITC Hotels is up 4%. 4.5% has got decent sized volumes right now. You've got most of the names we've kind of mentioned. I'm just looking at price gain with volume. Tata Communication is up about 4%. There is Avalon, which is up 5%. This morning. Actually, volumes are yet to pick up, so there's not very. I think we mentioned, the SAIL, MobiQuick's, GR, etc. And that's where bulk of the volume lies. It's very early, but it's very strong market breadth. There's almost 8 advances to 1 decline. There's very little on the downside, except the tech names, which are all uniformly down. TCS, Infosys, HCL Tech, Mastech is down 5.5%, but Mastech went up, I think, about 15% yesterday. So it's giving back a little bit today. Persistent is down about 1.5%. Wipro, Hexaware. I'm not sure if there's any news flow per se coming into the US. We'll check. But
it's just largely uncertainty ahead of the Fed meet, and the Nasdaq itself was down about 1.7% yesterday. So
also, there's a lot of negative narrative, and something I think that some of the brokers this morning have also noted. A large foreign broker, if I'm remembering, it might be Citi. We'll just check up on that. Again, highlighting similar concerns that there's the whole question mark on the US growth slowdown conundrum. And then the competition from GCC. So, and this particular brokerage is pointing out that valuations are still elevated and they're above, the mean levels that we've seen over the last 10 years. So, more selling on IT. That's the clear hallmark of today's morning trade.
Yeah. Now, I think, out of all that I've heard, maybe the US slowdown bit, perhaps, is maybe the underlying issue. You had the New York Fed
It is Citi on IT. Just clarifying. Yes, it is Citi. I was trying to remember which note I read in the morning. Citi's come out with a call saying that things are still overvalued despite the fall that we've seen in the last few weeks.
Yeah. But at the margin, maybe the slowdown fears. I think there's a New York Fed survey which we didn't highlight, which again kind of told you that maybe sentiment and momentum in the US, the economic momentum is slowing down. But anyway, we'll touch base with sort of more experts on IT as we go along. But that's the clear loser, 1.75% down on the Nifty IT index. Harish Krishnan is with us, co-CIO and head of equity at Aditya Birla Sun Life Mutual Fund. Harish, good to have you with us here. Prashant at the side. Just your thoughts, Harish, on how we are set up. Be constructive, look for ideas, deploy money. Or wait. I mean, let's just start with a broader kind of top-down call as a fund house. What's the view, Harish?
So I think we are positively biased at this point of time. We have used this volatility that we've seen in the last 4-5 months to increase our allocation to riskier assets, within various asset classes to capture and benefit from the volatility. So let me now try and get you the context as to why we've done what we have done. So about 6 months back, India was a standout over there that we had a counter-cyclical tight policy, both on the fiscal as well as on the monetary side. You had China, which had already told that they are going to loosen their strings. US, which had told that they want lower interest rates and potentially tax cuts to help their corporates and reshoring back. And in that context, India seemed to be an outlier with a weakening earnings growth profile. Moreover, on the 4-5 months in February, we've seen three big policy resets. The first policy reset that we saw was on the union budget, wherein we've seen a shift for demand side stimulus, which had been lacking for almost 5 years in the NDA 2.0 budgets, where their focus was always going to be on supply side, be it PLI, be it logistics, be it productivity enhancements, etc. And therefore, that 1 lakh crore benefit to taxpayers, I think marks a very big departure in terms of wanting to stimulate demand. The second big reset that we saw clearly was from the Reserve Bank of India, where we've seen a meaningful pivot, not only in terms of rates, but in terms of liquidity, as well as various policy instruments, that had kind of impinged credit growth over the course of the last fiscal year. We think that, over the course of the next 6-9 months, we are likely to see an improving credit growth outlook going ahead. The third policy reset that we saw was on the currency side. Many people may not really appreciate that whatever earnings growth that we see in India on the nominal terms, a big contributor is on the currency side. So while, of course, currency depreciation at the face of depreciation is a point of worry for various foreign investors, for local investors, the earnings growth, given that almost 55 to 60% of top line of India Inc. is in some sense dollarized, it benefits and therefore can provide a tailwind. So I think a combination of these three things today make India, as from a domestic perspective, a reasonably good space to be in. On the contrary, US has gone completely counter-cyclical, wherein they want to exert pressure on their markets, etc. So therefore, we have a situation where there is a potential where a lot of money can go outside. In all of this backdrop, clearly the big uncertainty continues to remain what really is the end game for US in terms of trade, and more importantly, what is the end game for the dollar, which the US administration is wanting to pursue. So these are the two big unknown variables that we think about. But we think that, if we take a 2-3 year kind of perspective, we think that these are very good levels wherein we have kind of increased our allocation to equities in, say, some of our funds like, say, Balance Advantage Fund, where we were at about 38% in October in the first 10 days. We are now close to about 70%. So that's the kind of increase that we've done in terms of increasing our allocation to equities, taking into benefit this enhanced volatility.
Okay. So obviously going sort of full throttle on equities now in the BAF, the Balanced Advantage Fund, as it's called, Harish. Great to have you on the show this morning. I want to specifically, call out metals, because sometimes markets can be so counterintuitive. When you talk trade wars around the world, metals is probably one of the most global commodity plays. And actually in 2025, it's the metals part of the market that's done the best. I was just looking at the numbers. The Nifty Metal Index is up 5%, while the Nifty is down about 3.5%. IT is down some 16-17%. So it's been very interesting. There is the whole Europe theory that's playing out, that now Europe is rebuilding itself. And then we have moves like the safeguard duty, which have finally come through. What is your call? Because this is global cyclical commodities at the end of the day. How are you looking at it tactically, short term, and what about medium term?
Sure. So at the start of the year, we had three dark horse sectors. One of them was private banks, second was metals, and third was cement. Of course, these are 3-year views. It's not necessarily validated or invalidated by what we think has happened in the last 2 months or so. But from a metals perspective, the reason why we have been positive is if we plot the profit pool share, which is the profit of the metal sector divided by the top 1,000 companies' total profit, you will see that it's a very cyclical sector. As of last quarter end, the profit pool share of the metal sector, you have to go back to 2001 to see where current profit pool shares are. They are at their 2.5-decade low in terms of profit pool share. Now, that is point number one. Secondly, we've seen ownership levels in metal stocks being very, very low. Thirdly, as you rightly pointed out, you're now seeing a resurgence of fiscal spending that has been absent in, to a certain extent, in China, and it's also been absent in Europe, which have seen a very big U-turn, especially in Europe, wherein they're wanting to stimulate their economies on the fiscal side as well. Now, it has got other implications, but for the real assets, it does increase the potential for demand creation that can come through. So I think a combination of all of these, along with the fact that, again, coming back to my point of dollar depreciation, generally, Indian metals are quoted in dollar terms as far as the revenue is concerned. And therefore, a weaker rupee, to a certain extent, also benefits, the metal complex. So we've been positive on metals as a contra trade. Of course, the move has been very sharp, but we think, over a 2-3 year period, there still is a reasonable amount of, greater alpha creation, we think, from this metal complex.
A couple of things that really stand out from the sectors that you like, which have been underperforming. One is chemicals. I'll get your views on that later. But for now, insurance is something that I'm looking at as well. What do you believe would be the triggers for insurance here, apart from, the underpenetration, increasing market share thesis that has been going on for a while now in terms of macros? Are you expecting anything specific coming from the regulators here? Maybe a cut in GST? Do you think that could be a trigger?
So you're right that, from a slightly more bigger picture perspective, we think that sector leadership is likely to change. There's been a dislocation in the market in the last 6 months. Sectors that have done well in the last 3-4 years are not likely to be the leaders in the next 3-4 years. And therefore, we have about 9 sectors where things have underperformed over a period of time. Private sector banks, metals, cement, you've got FMCG, you've got energy, you've got chemicals that you also spoke about. Insurance is the other name, textiles and Alcobev. In these 9 sectors, I'm not saying that all these 9 sectors are going to lead in the next 3 years, but pockets within these are likely to be the winners over there. And we think, therefore, insurance companies, there have been a significant amount of regulatory headwinds that have kind of impacted overall, wealth creation over the course of the last 3-4 years. While it's hard to call out when this regulatory phase is likely to come to an end, it's only post facto that we'll know that there is not going to be too much of tinkering. What we are enthused is by the fact that, there is no new player wanting to come into this segment. It is getting more and more consolidated. Profit pools are getting more and more consolidated to the biggies. And therefore, and the fact that, even the best run insurer, which has taken market share gains, which has improved their margins, etc., has underperformed the broader markets by almost about 700-800 basis points annualized over a 3 or a 5 year period, provides us a reasonable margin of safety for us to like the space. So therefore, we are positive on this space. Again, maybe a GST cut, maybe something else. It's hard to say what really can be the catalyst for this to play out. But we think that there is reasonable margin of safety in this space to play out over the course of the next 2-3 years.
I got that. By the way, on the services side, Harish, and especially on the exporter side, export to the US, what's the view? Are there any pockets you like? There was some recent, names like, these are very small, not really small market cap wise now, but recent listing, niche player actually, IKS, and you get the Sigility, or both in the healthcare space, but both completely focused on the US, or any other sort of export businesses which you think are well placed.
So I think, exports can be broadly classified into the IT services exports. You've got the pharma, you've got the textile pack, you've got the chemical pack, and then you've got, say, auto ancillaries and other manufacturing allied places, right? Currently, if I look at the last 6 months, there have been impact on, say, textiles. There's been impact on say, auto ancillaries, manufacturing exports, etc. And there has been lesser of an impact in IT and pharma. Of course, the last few weeks, we've seen some degree of that significant outperformance that we had seen since May of 2024, kind of, going away with the underperformance in the recent times. We think that there is going to be a potential reset of the dollar index. Again, it's a very complicated maneuver that the U.S. administration is pursuing, wherein they want to give the threat of tariffs, but they also want a rupee. They also want a dollar devaluation to a certain extent. Now, this is a very complicated maneuver. I mean, the odds of success, to my mind, are very low. But that is the kind of narrative that they are kind of pursuing at this point of time. So I think over the course of the next 3-4 months, we will get opportunities to deploy in exporters back. I think there's going to be some flux in the near term, but there are some very competent businesses. I think the key question that we need to ask is if there is a permanent kind of a reset of the currencies globally, will Indian businesses be competitive? For example, and this is just a hypothetical point that I'm trying to make, will the IT services businesses be as competitive as they were should the rupee be at 75 to a dollar? These are question marks that we are pondering about because these have multiple business implications. But I think over the course of the next 3-4 months, we will get some opportunities to deploy our capital there.
All right. Thank you so much for joining in with your perspective on the sectors that are likely to do well, the way the markets are poised, and how growth is likely to come from some of the erstwhile underperformers as against the earlier leaders as well. But the stock on our radar is Muthoot Finance. Why do we look at that? Because one, gold prices are at a record high level. Secondly, the company itself has gone ahead and looked at their gold loan assets under management, which has crossed the milestone of 1 trillion rupees. That's 1 lakh crore for perspective. In fact, S&P Global Ratings too expects the company to maintain excellent capital and earnings over the next 12 months. They are the market leaders here. What business is looking like for them? We have George Alexander Muthoot, who's the managing director at Muthoot Finance, joining in now. Thanks a lot for joining in, and congratulations on reaching that milestone of 1 trillion rupees on gold assets under management. It says, gold is glittering and gold financiers glittering even more. But, I just wanted your thoughts on, one, how's business looking in terms of loan disbursements? Secondly, as a percentage of the gold that you own versus the loan that you've given, how has that ratio moved, the loan to value ratio out there? How much headroom do you have because of the increased gold prices? And thirdly, on competition itself, the RBI had stopped a lot of other players from extending gold loans, and now they're back in the market. So in light of that, how's your market share held up?
Thank you and good morning. We are actually very pleased to have crossed the 1 trillion market mark for the gold loan assets under management. It's definitely a feather in the cap for the company as well as for the employees and for all the stakeholders, whether it is the employees, customers, everybody. So we are definitely elated with that. Having said that, you asked about the demand. There is still good demand coming from both the rural as well as the urban markets, because availability of funding, as I was saying earlier, is little restricted because of microfinance is also having some issues. The personal loans, etc., people are, the lending institutions, both banks and financial institutions, are not very forthcoming with that also. So people need funding. And we feel happy that we were able to provide this funding. Now, you asked about the loan to value. The maximum we give is only 75%. But then, since the gold price has been moving up, today, if you look, our lending is only about 60% or 62% because the price has shot up so much. So, if you take the total gold with us and the amount lent against the gold, it's only about 62% or so. So, it's not that there is headroom. If people want, they can come and borrow. Not that everybody will take all the money. They take the money whenever they want it. So if somebody wants more, they can always come and take it. And new customers need not bring much more gold. They need to bring only lesser quantity of gold to get the amount they require. So overall, this sector is looking good. We feel that we are effectively aiding and helping the economic progress also, because without consumption, without people having purchasing power, the economy cannot move forward. So we
Absolutely.
feel we are able to provide this funding at this good time. And
Yes.
there is one more feather in our cap. The International Rating Agency has upgraded us from BB to BB plus yesterday. So that's also another feather in the cap for the Muthoot.
Absolutely. And I'm going to come to that in just a second, sir, to talk about how now that you have a better rating, plus liquidity conditions are improving in the market. So what does that mean for your funding costs? I'll come to that in 1 second. But just to complete the point on better business prospects when gold prices rise, I mean, you've been doing this business for decades. So is there some sensitivity analysis? Like you're saying, right now you're at 62% LTV. Your maximum cap is 75%. So if people want to borrow more, they can with the same amount of gold now. Typically in the past, what happens? I mean, do people tend to come forth and increase the size of their loans when gold prices rise? Is there some rough pattern from the past that we can go on with?
More than that, I think every newspaper, there is one article about gold and gold price today. So people having gold with them, they are seeing that their wealth is increasing. So they are seeing the wealth which they had as gold, which was earlier less wealthy, less important, is now becoming very important to them. And please look at it on a very big point of view also. We have always saying that India had 28,000 tons of gold. Don't you feel Indians have become much wealthier in the last 2 years because the price has shot up by 50%? So whole India has become wealthier.
No, absolutely. Sir, notionally, it's a feel-good factor. Notionally feels wonderful, considering we are such big owners of gold, right? But in terms of the realistic AUM growth, I mean, last time when we spoke at the end of February, you told us that AUM growth of 25 to 30% is on a full year basis is what you would look at doing. So, does this surge in gold prices, does it push you closer to, say, the 30% mark in terms of growth for next year?
We already close to 38%, ma'am. So we are almost touching 40% this year. So
40% AUM growth this year?
Yeah, AUM of 40% is almost, we are reaching there. So as of today, when we reach that 1 lakh crore, we have already reached 38%. So I think we should do better. We were just conservative in saying that we always...
When you said 25-30%, but you will end FY25 with 40% AUM growth. That's definitely a headline.
That's a glittering headline, but the question is what happens next? Because after a 40% growth this year, what are your targets for FY26, FY27? The rate at which you're growing, I think 2 lakh crore should happen in the next 2.5 years. Is that possible?
Thank you for the good comments. But then, as usual, next year also we will be giving a guidance of 15% only, sir. So we will do better, but our guidance will always be that, and we plan to do definitely better. We hope to do better. Of course,
would you do it at better margins?
22,000 crores to 1 lakh crore. So any percentage is big number today.
On a lighter note, Mr. Muthoot, the guidance is not 15%. It is, quote unquote, better than 15%.
Yeah, thank you. Thank you for reminding me.
Would you be earning better margins on this? Because, you spoke about the upgrade that has come in from a ratings agency. Generally, the expectation is that maybe there would be a couple of rate cuts by the RBI as well. So cost of funds is likely to come down. What does that mean for your margins going forward? What kind of guidance can you give us for this year and the next?
Yeah, we always keep a rate of our net interest margin, maybe 10% or so. If the rate of interest, the cost of borrowing goes up little, we try to absorb it. But if it goes up very high, we pass it on. The same when it is coming down also. If the rate of interest or borrowing cost comes down, we will certainly reduce our yield rate. Because we see this as a long-term business. So customers should feel that when rates are coming down, our rates also come down. Because customers see when the rates go up, we charge higher. So to answer your question, if the borrowing cost comes down considerably, we will certainly reduce our rate. Our margins will always be the same. Our net interest margin is always the same.
But sir, you were at the end of the third quarter, I think you were at about 11.5% margin. Now you're saying net interest margin should be around 10%. That would be quite a decline, right?
the decline. This is also centric. So one quarter there will be more. The loans are all very short term. So sometimes it takes a month or 2 months for the rates to catch up. So because these are all short-term loans, so when we do a tweaking in the rate also, it takes 2-3 months to change. So quarter on quarter it will be like that, but yearly 10 plus or minus plus or no 10 to 11 is what we usually keep.
Okay, 10 to 11% margin on a full year basis. That's what you will guide for going forward in the next year as well. Got that point. Just a word on market share as well, because in between there was a lot of intense competition between banks, particularly in the south, right? They were giving you a tough fight, but you folks have been so well entrenched. So what would Muthoot's market share be now?
See, as far as the NBFCs are concerned, we have the highest market share. But of course, banks have a much better branch network. They have more than a lakh of branches with all the banks put together. So they have headroom there. But then as far as NBFC is concerned, our market share is definitely quite good, and we hope to continue there also. But as far as competition is concerned, I don't see it as competition. The market is widening. More and more people are now looking at gold. So the people who earlier were not very comfortable taking a gold loan are now feeling very comfortable because banks are doing it, and this is a very valuable asset today. So I think it is not that the competition, there is room for everybody. As I said, has always been saying there is room for everybody. And we, with about 5,000 plus branches, if you look at our subsidiaries, also about 6,000 branches, we have. So we are well placed to maybe to take the opportunity and probably grow the business. That is one of our big strengths.
Right. Mr. Muthoot, final question before we let you go. Yeah, we understand that we are celebrating you having reached 1 trillion rupees in gold AUM, but you know, the non-gold portfolio, the MFI portfolio, that's still not out of the woods. How is that part of your business doing in terms of asset quality, and what are your plans to improve upon there?
Yeah, I think our microfinance had a portfolio of about 10,000 plus crores maybe 6 months back. Now they are moderating it. It is about 8,000 to 9,000. It has come down. So rather, they are moderating the growth. So if we see another 2 quarters of the issue, that pressure in the microfinance, but I think after 2 quarters it will stabilize. And that to say, too, of course, we are one of the very non-significant player in the microfinance market. We are just a player there, and probably whatever is happening in the microfinance, good or bad, definitely affects us also. But having said that, we in Belstar Finance, a good portion of it is the self-help group. We have that, and not the joint liability. So that actually helps better recovery. So their recovery, our recovery is a tad better than the market. But again, if the market is down, they are also down. But definitely better than the average company.
And you're saying the worst is over for Belstar?
Yeah. Thank you.
Okay, all right. So we'll leave it on that note. Thank you very much for joining in. Great chat as always.
We'll have a celebration in Bombay for the 1 lakh crore.
Oh, you have a celebration in Bombay. Okay, well, congratulations.
And have it with CNBC.
Okay, thank you so much.
Looking forward. Thank you.
Thank you very much. We'll take a quick break on that note, come back on the other side with another very, very interesting discussion. Summer is in full bloom. So what does it spell for the room air conditioner industry? B. Thiagarajan of Blue Star as well as Vikas Gupta of PG Electroplast will join in. Welcome back. As we kickstart our next discussion, just want to point out that it's a fantastic day for the mid-cap market. The Nifty is, taking it easy, consolidating. Look at what's going on in mid-caps. The advanced decline ratio is solid. The index is up about 1%. So many names: Bajaj Housing Finance, ITC Hotels, Balrampur Chini 7%, NMDC Steel 7%, Mishra Dhatu 7%. I'm just, rattling off names to give you an idea of how strong the broader market is this morning. Well, the next set of stocks on our radar is actually, like I mentioned, from the air conditioner space, considering that we're getting into the thick of summer season. And it promises to be another very scorched summer, going by the Met Department's predictions. So let's straight away get to our next set of guests, Mr. B. Thiagarajan, Managing Director at Blue Star, and Vikas Gupta, Managing Director, Operations at PG Electroplast. Thank you very much, gentlemen, for joining in. While everything looks very good, the season's hot, I'm sure that, you folks have been filling up the inventory channels. We want to get your clarification on two important issues. One slightly negative, because some of the brokers are pointing out that there is a bit of a shortage of components like compressors in the system. So that's important. The second is a positive, because it seems that the government could be incentivizing five-star air conditioners to basically make it more energy efficient. So we want to understand the implications of both. But let's start with the shortage issue first, Mr. Thiagarajan. Is there one? If yes, how are you sort of working around it? Your thoughts, sir?
Shilpi, good morning. It's a pleasure interacting with you. As you may recall, last summer season was a exceptional one with over 57% growth. Now, the projection this year is on that large base, the growth could be 25 to 30%. Going by not only the IMD forecast, but what is happening in the counters. And this category is doing extremely well. It has done well in festival season. We expect it to grow. In that context, whether there are enough compressors in the market for the manufacturers to produce these items and supply. There is an issue, there is no doubt about it, because under Make in India program, there had been non-tariff barriers on certain components coming into the country, and these are being on case-to-case basis, relaxations have been happening. Now, quite a bit of compressors are coming from China. India is not yet self-reliant. We expect that it will take around 2 to 3 years more for Indian ecosystem to feed compressors locally manufactured. Now, the concern has been whether the manufacturers would have secured the demand for the summer season. It is touch and go. If it is 25 to 30%, my assessment is it will be very tight for the manufacturers to get these compressors, produce the machines. Now, we all plan for the summer season by December itself, and the supply chain would have been taken care of for the summer requirement is my view. If at all there is a shortage, if the growth is going to be beyond 25%, and there is a huge rush in a particular month, otherwise, summer season should go through. But one can ask what happens to the future. The government is evaluating what is the local capacity, who all can come in to manufacture, which are the clearances that must be given for the compressors to come into India.
Even Mr. Thiagarajan, just sorry, on that specific point, apparently, and this came in last night, the government has exempted some of these components from BIS certification to avoid shortage during the summer season. Prashant, this side, sir, could you confirm this? And I think, but there's a category, right, above 2 tons.
That is right. Prashant, 2 ton and above, there is no local manufacturing. So that has been, clearances are being given. That's not a problem. We are talking about 1.5 ton and 1 ton, 0.75 ton, these compressors. See, the question is, it is touch and go at this point of time. And the government is fully aware of it. What is the local capacity? What is the local demand happening? Therefore, how these non-tariff barriers should be managed. I think they will do the needful. Equally, they have sought a commitment that the manufacturers should come forward to build the capacity. We all have made commitments that in what period, how we can go ahead and create that capacity.
Mr. Thiagarajan, just for 1 second, yes, we'll talk about that as well, I mean, where we are placed, but let's also get Mr. Gupta's assessment of the situation. Mr. Gupta, do you concur? Mr. Thiagarajan is saying it's touch and go. If the demand is about 25-30%, the current supply chain can still handle it. We won't be looking at a shortage. What's your assessment?
So, good morning, Sorbi. So, largely, I would agree with what Mr. Thiagarajan sir has said. And we also feel the whole industry as a players, all the players in the industry have factored in and they've managed their supply chain, they've managed their ordering to take care of the growth of around 20 to 25% in the market. If in case the market grows beyond 25%, some players might face some challenges. So that is an issue that might come. But we are just keeping our fingers crossed because it all depends how the weather will play out. And let us see how it goes. But largely, if you look at 20 to 25% growth in the industry, most of the players should be able to sail through.
Mr. Gupta, an additional question to that, as Mr. Tyagarajan was saying that, because of the Make in India push that has happened, do you think the capacity enhancement has been slower than what was earlier anticipated? Because you still need about 2 years to be fully reliant, or do you think it's on target? I mean, what's your own planned capacity expansion here to be able to help the cause of the likes of Mr. Tyagarajan and the others?
Mangalam, the important point is that we all work closely together. Mr. Gupta has been working with all other stakeholders. The question is that there are 2-3 elements here. Number one is compressor is a component which is critical. It has to be highly reliable, and it has to be designed once in 2 years or 1.5 years for the energy efficiency table changes, the subject which we will talk a little while later. And it should be cost competitive because Indian market has got used to Chinese prices. Now, unfortunately, the compressor components which are supposed to be also getting imported, some other Ministry of Heavy Industries have brought in another non-tariff barrier, or a QCO it is called. Therefore, we are fighting many battles. But it is part and parcel of the game. And Mr. Gupta, he is one of the leading players trying to indigenize compressors. He will explain to you.
Sir, just a second. What specifically are these non-tariff barrier issues? And are you petitioning the government at all for any relaxations at this point in time? Considering you're saying it's touch and go, if the demand goes above 30%, then we could have a shortage.
Every week, the government is proactive, we are proactive, we are in dialogue. What this means is, tariff barrier, we are all aware. Non-tariff barrier is, there is a Bureau of Indian Standards. It has to comply with that Indian standards for someone to export into India, or India can import only from those vendors for those specific components which are approved by BIS through a license. And now, for these restrictions are brought not only for the complete component, the components meant for manufacturing that component. What I talked about by Ministry of Heavy Industries is connected with a component that goes into compressors. And the dialogue is happening every week.
Okay, we hope it resolves very quickly, sir. I mean, this discussion took long, but on the other point, maybe just a quick brief thought. Also reports indicating that the government could look at incentivizing, like I said, 5-star air conditioners. They're far more energy efficient. Some of the other countries, I think China, for instance, offers incentives. I don't know if you're hearing something on this, whether this will happen in India in this season itself. And if it does, to what extent could it boost, let's say, your margins, overall sales of these higher value products? Mr. Gupta, Mr. Tyagarajan, just quick 20-second points.
Mr. Tyagarajan, please.
Mr. Tyagarajan, sir.
The dialogue is happening, and there are 60 million air conditioners which are non-energy efficient installed in the market, which have to be replaced. An incentive scheme is being worked out. We are looking at whether the customer has to be paid, or it is manufacturers will receive that incentive in order to encourage the customers to come and exchange these air conditioners for 5-star air conditioners. Mr. Gupta.
So Surbhi, what we feel like, if we are able to get a incentive from the government in a form, as Mr. Tyagarajan is saying, that we are already in the discussion, we can actually be able to save a lot on the energy bill, because the 5-star rated energy efficient air conditioners will be able to save almost around 20-25% of the energy bill. But the cost is a main kind of a hurdle in this, so that we need to overcome by the way of providing some kind of incentives in this.
Mr. Tyagarajan, I can't let you go without asking. I've asked you this quarter after quarter. I think there are now, 65 air conditioning brands in the market. I think not counting private labels.
Yeah.
It's just, demand, there's a long runway, and I think it's getting hotter and hotter. There's no doubt about it. I think February was the hottest February in a long time, and I think we'll keep breaking records. But so the demand is going to be there, but competition, intense, right?
It is, Prashant, it is the happening place. India is the fastest growing market. And this category is the only one which is growing among the consumer durables. Therefore, we can expect every player to be there, hold on to market share or improve the market share. Equally, there are eminent players like PG Electroplast, where they are producing for others and helping them to enter the market also. It is like, I go back to the analogy I keep telling you. It's like cricket. To get into the test team or a ODI team or T20 team is difficult. But once you are there, you have to perform. And it is exciting. The T20 season is on and we are there. And all of us enjoy competing. Let us see.
Absolutely.
All right.
We'll leave it there. Mr. Tyagarajan, appreciate you joining us and running us through the perspective on the air conditioning market, components, etc. Mr. Gupta, thank you very much for taking out the time and being with us here as well. I think let's welcome in the management of the next management who's with us. Raymond is the company in focus, and we've had them waiting for a bit. Apologies for that. Third quarter of course, came and went. The company, it has said that the potential revenue from the real estate business is over 32,000 crore rupees. We have Amit Agarwal, Group CFO at the company, now joining us. Amit, good to have you with us here. As I said, apologies to keep you waiting. Prashant here. Could you give us a sense of how many additional joint development agreements are under evaluation, and what is the estimated revenue potential from these projects?
As you know, thank you for having me. And as you all know very well, that we continuously evaluate the various real estate JDA opportunities. And at any point of time, there are almost 6 to 7 opportunities which are almost there to be finalized. But actually, you pick it out from there, almost 1 to 2 opportunities. So if you look as of now, we have already signed more than 6 JDA, which translates to more than 14,000 crores of revenue. And we continuously work on this. And we believe that over the next 3 years or so, we should have a share from our Thane land parcel, 50% from the revenue and 50% from the JDA projects. That's a broad theme with which we are working on. And we are seeing opportunities in the JDA world.
And what timelines are you working on in terms of realizing this revenue, Amit? This is Mangalam here. And I also wanted your thoughts on, the value growth guidance. You had earlier given 20 to 25%. Do you think you can exceed that? We're just about 15 days away from the end of this financial year. And a word on collections too.
So if you look at it very simple, I think the revenue potential, any project which you sign up, it takes almost 18 to 20, 22 months before you start the project. Once you sign, it takes that much of time, getting the government approvals, talking to the various people in terms of the apartments, that which kind of a layout and everything. So that is almost 18 to 20 months. And after that, it's a project, and we have demonstrated our performance. We talk about a 5 to 6 years a project should take, but we have been able to complete the projects faster. So I think overall, you can talk that these projects, the time we sign, from there, anything between 6 to 7 years, you would realize the full potential. And that's what we are talking about. But Thane, as you know, continues to deliver good growth in the revenues, as well as our project in Bandra, which has started to do very well, has also given a good potential on the revenue side.
We've got that. On the engineering business, Amit, if you can give us a sense, I think you've mentioned that you remain particularly excited about the aerospace sector. Could you give us a sense of what's happening there? What kind of work are you seeing, size of work that you're getting, and the potential?
Absolutely. No, so aerospace is a great opportunity. You see, India as a country is just about, it's a aerospace component market is almost like a $100 billion market, $100 billion market. India is almost 1.5 to 2%. There's a huge potential for India to grow into that market. And we are looking clearly to be one of the participants into that market. We supply the engine critical components. We are expanding the facility. This year, obviously, the revenue increase would not happen significantly because of a simple reason. One of the large aircraft manufacturers we all know was on an extended strike with the laborers, and that has led to the revenue pushing to the next year. So in the next year, we are seeing very clearly anything between 25 to 30% growth on the aerospace business. And over the next 3 years, we clearly double the revenue of the aerospace business with a very high margin analysis.
Okay, so put all of this together, could you give us a sense of how FY26 will shape up? I mean, do you have that clarity, both on revenues and margins as well? I mean, would you see margins above 15% overall?
If you look at it, as you know, that we are in the process of the demerger of the real estate business from the Raymond Limited. So you would see that the demerger gets completed somewhere in June, July timeframe. And after that, the Raymond Limited will have only the engineering business, and Raymond Realty will run the sort of real estate business. And if you look at it in terms of the revenue, I think we are very clear that we will be achieving the 20% growth clearly in terms of the revenue for the real estate business, as well as the margin improvement will continue to happen. So that is a clear journey. We have clear projects to be outlaid. Similarly, in the engineering sector, also considering that the aerospace is doing very well, even the auto sector, maybe there is a bit of a lull in the European market. And, you know, our auto components business has a lot of exports. And at this juncture, with what all is happening with the tariffs all across the globe, I think it becomes a little challenging to say exactly we will be able to deliver. If things remain in a similar manner, which we have today, I think we should be able to do more than 20% on an engineering business, also the growth.
All right, Amit, thank you so much for joining in. We'll discuss all the other parts of your business immediately after you report your results. You'll be at liberty to share some more granular details as well. But for now, thank you for giving us the insight. The broader markets are the ones that really call for your attention. The mid-cap index is now up 700 points, of 1.5%. Zomato's continued to move higher, was up 7% yesterday as well. This morning at the high point of trade, Delivery is doing well. Oberoi Realty, Prestige Estates, Geo Financial Services continues to rally. So good time to get in trades at 10. Mitesh joins in once again. Mitesh.
So I think, something which has caught my eye from the real estate sector is Oberoi Realty. That's just breaking out from the intraday averages. Therefore, it's a buy with a stop at about 1569 and a target of around 1625, 1630 is what I'm looking at. Eventually, I think it can go even higher. The other one which I like is NTPC, which is a buy with a stop at about 337 for targets of 355.
All right. Thank you for joining in with a quick view there. With that, we'll step into a short break with the news that the market continues to do well. On the other side, we focus on the commodity space as well. Manisha Gupta joins in.
Welcome back. Well, let's quickly shift the focus to the commodity markets now. We have Manisha in the house with the latest. Manisha, so what's the big headline?
Well, it is gold because, all of last year we kept talking about on how $3,000 an ounce perhaps was in the making. But this year, not just that 3,000 has been broken, but we've seen 3,038 as an all-time high in the New York session yesterday. This is a chart that tells you on how quickly the gold prices have started to move. 1st of January in this year itself, we started with 2,650 and we're standing at 3,038 right now. So that has been a $400 per ounce of a jump up coming in there. 1st of Jan 2024 was 2,045. So when you look at from those kind of levels, we're up by $1,000 an ounce in a matter of perhaps 14, 16 months there. And as you can see, it's been a constant gaining. There's been one linear line of bullishness that we've seen in case of gold prices from 1795 in 2022 to 1856 to 2045 and 3038 right now. And when you look at the markets, we are looking at very, very strong fundamentals continuing in case of gold with an expectation that we could be going higher from here on. If you look at the fundamentals itself, there has been escalation escalation in tensions in West Asia. That clearly has been the major supportive factor. The safe haven buying, the portfolio diversification and new investors coming into gold has been the reason that you have seen the prices continue to gain up. The trade tariff impact on economies is seen to be slowing many of these economies, in turn supportive of the market. Also, all the US economic data that we've seen come in the last 2 or 3 days, whether it has been about retail sales, home building, inflation numbers, all of that leads to safe haven buying and slowing of economy in the US markets there. Also, there have been strong inflows in gold-backed ETFs, so the investment demand has been strong, and the central bank buying has been on a higher side as well. Whether it has been about Asia, where you've seen India, China buying stronger, or the Middle East, or even the US markets there, the buying clearly has been on the investment side there. The dollar index trading at a 5-month lows has been yet another reason that we have seen all of the safe haven buying actually come in for gold. The outlook for 2025 from here on is going to be quite interesting. 3,000 was a level that most banks said you would be looking at being achieved by end of this year. We've already done that in the first quarter itself. So there is a revision in prices now. An average of $3,000 is what you could see is what the most banks are saying, but there's a revision that's come in the previous week itself. So ANZ talks about 3,100 to 3,200 in the next 6 months as well. De Beer Group talks about 3,300. $3,100 an ounce is what Goldman Sachs and BNP Paribas also have put out as an all-time high going forward into the markets there. And this just about continues. I think the most bearish count clearly is UBS, where they anticipate the prices to see some correction, which almost everybody does. But 3,000 is what BofA is putting at as an average price for the rest of this year. 3,200 from Citi, and Macquarie, being the most bullish, anticipates $3,500 an ounce in case of gold prices in coming months.
All right, Manisha, thank you very much. All that glitters is gold, I think, definitely. Thank you very much for that. Well, time for a quick commercial break. Here on the other side, it's our special segment. It's the economy. Lata talks about the spate of deals in the NBFC and insurance space with the analyst at Kotak Institutional Equities. That's coming up. Stay tuned.